Hello friend, issue of share part 14. Today we try to see when shares are forfeited, reissue, how we are going to record it. Remember that call scenario. Company give one more chance to the shareholder. Say that Mr. X holding 500 shares could not pay the first and final call. One reminder is sent. Mr. X, 500 shares allotted to you. You could not pay the first and final call. Please pay the amount on or before one date is given fixed. Before that, if that person paid the amount, well and good. If that person could not pay the amount, then that shareholder are not the shareholder of the company. Whatever it may be the amount paid by X, that is not going to be refunded, and company issue that X share to any person. That is called forfeited of the shares. And when the forfeited shares reissued, generally reissued of the forfeited share, generally this is not the rule, at a discount, and discount is nothing but the forfeited that we transfer to the forfeited account. And last, balancing amount. See that when shares are forfeited, capital amount is going to be reduced, share capital account debited. When capital increased, that capital we credit, share capital always we credit. Not only it related to the company, any proprietor, partnership, there also we are going to do the same thing. Cash account debit to capital account, or cash account debit to X capital account, Y capital account. Now here a partnership, company organization. Bank account debit to share capital or whatever it may be, we credit it to the share capital account when capital is going to be increased. Now capital reduced, that's why share capital account debit. To forfeited shares means whatever it may be the amount paid by that shareholder, that is not going to be refunded, and naturally that is the profit income of the company. That's why we have credited forfeited share account to forfeited share account. And to calls in arrear, this is nothing but the transfer entry. Calls in arrear when bank account debit, calls in arrear account debit to first call or allotment, whatever it may be, there we debited the calls in arrear. Now it is credited to calls in arrear, transfer entry, nothing is there. Again I am going to repeat, when share forfeited, share capital account debit to forfeited share account to calls in arrear account. Now these forfeited shares are reissued. Generally, I am again going to talking that generally forfeited shares reissued at discount. Bank account debit, forfeited share account debit means here a discount. Forfeited share account debit discount to share capital. Say that 10 rupees shares issued at rupees 8 each, 2 rupees discount, fully paid up, bank account debit, whatever it may be the number of share into 8. Forfeited share account debit, whatever it may be the number of share into 2 rupees is the discount. To share capital, whatever it may be the number of share issued into 10. Again I am going to repeat the entry, bank account debit, forfeited share account debit to share capital account. Last, again transfer entry. Here forfeited is our profit, we can say that gross profit. Forfeited share debited is the loss, profit minus loss, net profit we transfer to capital reserve account. Capital reserve means it's a capital profit, that's why that profit transfer to capital reserve. Forfeited share account debit to capital reserve account. We'll take the example that here forfeited share credited by 400 rupees, forfeited share debited by 100 rupees, balancing figure 300 that we transfer to forfeited share account debit to capital reserve account. Okay, now with the problem, we'll try to see the problem. Let us see the problem. Now let us see with the problem. Company issues 25,000 shares, face value of the share is 50 and security premium 10. Total applications were received for 30,000 shares, rate rupees 20. Allotment, gross amount 25,000, 10 for security premium and 15 for shares. 25 includes the premium, security premium. So 10 rupees for security premium, balance for shares. First and final call rupees 15. Here problem story again developed. 2000 applications were rejected and for balance pro rata allotment means total 30,000. 2,000 application rejected, balance 28,000. For 28,000 shares are issued 25,000, 3,000 surplus application, and that amount transferred to next call means allotment. Such a type of allotment is called pro rata allotment. Again, Mr. X holding 400 shares failed to pay call means first call, and his shares were forfeited, and that forfeited shares were reissued at rupees 45 per share, fully paid up. Face value of the share is 50. Issued for 45,000, fully paid up means discount of rupees 5. Now let us see the entries. First entry, bank account debit to share application account. 30,000 total applications. 30,000 into 20, amount 6 lakh. Amount 6 lakh. Narration being, applications received for 30,000 shares at rupees 20 each. Second entry, share application account debit 6 lakh. To share capital account, to share allotment account, to bank. Share capital 25,000 into 20, amount 5 lakh. To share allotment 3,000 surplus application, 3,000 into 20, 60,000. 2,000 application rejected, 2,000 into 20, 40,000. Total of these three will find the 6 lakh. Again I am going to repeat the entry. Share application account debit 6 lakh. To share capital account 5 lakh. To share allotment 60,000. To bank 40,000. Narration being, amount of share applications transferred to share capital account, 2,000 applications rejected, money refunded, for balance pro rata allotment was made. Entry number third, share allotment account debit to share capital to security premium. This entry is due. Share allotment due. Share allotment account debit 25,000 into 25, square of 25, that is 6,25,000. Share allotment account debit 6,25,000. To share capital account 25,000 into 25,000 into 15, 3,75,000. To security premium to 25,000 into 10, 2,50,000. Total of these two you will find 6,25,000. Again I am going to repeat the entry. Share allotment account debit 25,000 into 25, 6,25,000. To share capital 25,000 into 15, 3,75,000. To security premium 25,000 into 10, 2,50,000. 3,75,000, 2,50,000, total 6,25,000. Narration being, share allotment due with security premium at rupees 15 each and rupees 10 each respectively on 25,000 shares. Next, fourth entry, bank account debit to share allotment account. Remember that in entry number 2, advance receipt of share allotment 60,000, that amount is not going to be collected. So 6,25,000 minus 60,000. Balancing figure 5,65,000. Again I am going to repeat. Entry number second, share allotment we have credited 60,000, 3,000 shares of rupees 20 each, amount 60,000. That amount is not going to be paid by shareholder. So balancing amount is collected 5,65,000. 6,25,000 minus 60,000, amount 5,65,000. Bank account debit to share allotment account. Narration being, share allotment received with security premium on 25,000 shares at rupees 15 each and rupees 10 each respectively after deducting advance receipt of share allotment. Now first call due. Share first call account debit to share capital account 25,000 into 15, 3,75,000. Being share first and final call due on 25,000 shares at rupees 15 each. And in this problem, Mr. X holding 400 shares could not pay the final call, first and final call, amount rupees 15. Entry like this, bank account debit calls in arrear account debit to share first and final call account. Bank account debit balancing figure. Remember that total number of shares 25,000 minus 400 means 24,600 shares into 15. and call scenario 400 into 15, 6000. To share first and final call, 3,75,000. Call scenario 6,000. Balancing figure 3,69,000. Total of these two, 3,69,000 plus 6,000, you will find 3,75,000. Again, I am going to repeat. Bank account debit, balancing figure 3,69,000. Call scenario 6,000. To share first call 3,75,000. 3,75,000 minus 6,000, balancing amount 3,69,000. Or we can say that 24,600 shares into 15, you will find the figure same. Narration being share first and final call received on 24,600 shares at rupees 15 each. Entry number 7, shares forfeited. 400 shares were forfeited after first and final call. So share capital account debit, full amount 400 into 50. 400 into 50, amount 20,000. To forfeited share, whatever it may be the amount received, that X could not pay the 15 rupees, means paid 35. 400 into 35, amount 14,000. Call scenario, he could not pay 400 into 15, 6,000. 400 into 15, 6,000. Narration being 400 shares were forfeited on which first and final call could not be recovered. Okay. Now these 400 shares were issued at rupees 45 each, means 5 rupees discount. 400 into 45, bank account debit 18,000. Forfeited share account debit 400 into 5, 2,000. To share capital 400 into 50, 20,000. Again I am going to repeat the entry. Bank account debit 400 into 45, 18,000. 5 rupees discount. Forfeited share account debit 400 into 5, 2,000. To share capital 20,000. Narration being 400 forfeited shares reissued at rupees 45 each, fully paid up, discount transfer. Last entry, forfeited share account debit to capital reserve. Remember that here we credited forfeited shares 14,000, that is our profit. Here forfeited share debited discount, that is our loss. Net profit will find 12,000. 14,000 minus 2,000, balancing figure 12,000. That balance amount we transfer to capital reserve account. Forfeited share account debit to capital reserve, amount 12,000. Narration being balance of reissued forfeited share transfer. Okay, thank you.